Hey, how's it going, family? This is Shaheen. Hope you guys are having a good evening. I'm recording this pretty late at night. I don't expect a lot of views tonight, most likely tomorrow morning. It's like 11 p.m. where I'm at right now. Not gonna get too much sleep, but I'll be there for open and we'll strike. Anyways, this video is gonna be me basically going over my favorite indicator in trading while I'm day trading these naked options every single day, and that's obviously the TTM Squeeze. I personally have the Squeeze Pro, but I was also trading for plenty of years successfully with just the basic Squeeze that the TOS has built in. Um, I believe you can purchase the Squeeze Pro on Simpler Trading's website. That's John Carter's company. I believe he created the Squeeze, so all credit, all props goes to him and Simpler Trading. But don't worry, this video will apply to both versions of the TTM Squeeze. Anyways, let's jump into it. So, the Squeeze has been with me since the start of my trading career, basically. It took me years of backtesting to realize that most of the times I was losing money, it was because there was no Squeeze on the ticker I was trading. And if you're brand new to this indicator, the TTM Squeeze will provide periods, or it'll indicate to you when there's been periods of consolidation in a stock. And the way traders use it is that this consolidation is generally before a larger than expected move. For instance, these dots right here, when they're black, when they're anything other than green, that indicates a squeeze. So we get some black dots right here, we get squeeze consolidation right here, and then we get this larger than expected move, push higher. Now, it's kind of like a calm before a storm. Basically, you get the calm and then you get the storm, you get the rip. And as soon as I started trading with just names with squeezes, my P&L began to slope upwards. And I'm sure a lot of you guys listening to this grew up in the squeeze, but if you haven't and maybe you learned the squeeze later in your trading career, I'm sure you realize the same thing, that squeezes provide so much value. And trading names with squeezes only will generally ensure that the stock you're trading has had its time to set up and is prepared to make a move and prepared to basically pay you. You know, you put in enough patience into the market and it will reward you for that. That's what I've noticed in my trading. Now, being a day trader, I focus on finding squeezes between the 30-minute to 4-hour time frames. 30-minute, 1 hour, 2 hour, 4 hour. Anything below, like the 15-minute, 5-minute, 1 minute, I really don't trade. And anything above, like daily squeezes or weekly squeezes, I do like to see. But with that being said, I am a day trader, and I'm generally not a swing trader, although I will swing. But in terms of like a weekly time frame, I'm not going to be swinging for more than a week. And I need to remember personally that I need to stay in my lane, what I'm best at, and that's short time frame trades, and generally not focus too much on the weekly squeezes. Although I do like seeing daily squeezes and I will trade them, I will usually only trade them if they're also smaller squeezes as well. That's just what I'm personally best at. Anyways, one other thing I need to state is that I won't take a trade just because of a squeeze. If I see a squeeze right here, that doesn't mean I'm buying calls or buying puts. I have to have a reason behind that as well. So according to my system, it just needs to be another catalyst. And catalyst could be like a confirmation with my zones, with my levels, or some sort of fundamental news, or a pattern breaking. For instance, channel. If we want to have a little pattern class, you see we get all these top, and as soon as we start breaking. No squeeze right here, obviously, but just an example of a pattern. Anyways, I just need another catalyst to trade. Squeezes are amazing. They're my favorite indicator, but like I said, I'm not going to take a trade just off of a squeeze. That being said, the first thing I take into account when I'm trading squeezes is I want to know my play. You know, you can take trades You can trade squeezes in plenty of different ways. But when it boils down to it, at least me personally, I see my squeeze trades in two different types. Either I'm trading in the squeeze or I'm trading as the squeeze is breaking. Now, let's go over positioning inside of the squeeze first. So positioning inside of a squeeze, like this one right here, it's one of the ways I make income on a weekly basis. I trade it. You'll see me trading these types of plays every single week. And it's important to understand, and I generally tweet about this if you follow my Twitter. I tweet about this all the time when I enter in the middle of a squeeze. I tweet that you need to accept more risk, and that I'm personally accepting a bit more risk on these because you're not sure when the stock is going to break or even which direction it's going to break. So when you're playing with naked options, you really need to accept more risk. If you're buying calls on something, you could easily wait multiple days and then just dump down. There's no reason why it has to do what you want it to do. Okay, but a good foundation rule that I've learned over the past few years is and I'm pretty sure John Carter will talk about this from Simpler Trading. A lot of those traders will talk about this, but a way to decide between calls or puts on a name in a squeeze is just to identify the trend in not only the stock, but also the market. So if you go to a daily time frame, or if you're trading a squeeze off of the 30-minute time frame, maybe you go to the 2-hour, 4-hour chart, see which direction the market and the ticker you're looking at has been going in. And in doing that, you can find out generally which either call or put you're going to want to buy. And obviously there's a lot more that goes into it, and that comes down to what other catalysts you like to use. I personally like using my zones. I use zones with my squeezes to make trades. So for instance, right here, if you look at this, we're in the squeeze right here, but we're also starting to trend upwards. If we look back, Google was in an uptrend. If I'm playing off of a 1-hour squeeze, in the past couple days, it's been in an uptrend. So it's pretty obvious that I'm going to look for calls. And so let's go over this example first on Google. Today, I actually traded this name in this squeeze. So I bought the 3,000 calls. 3,000 being up here. I bought the 3,000 calls at 1:30 p.m. Central Time, which is like an hour and a half before close. And so I grabbed these in the middle of this 1-hour squeeze, and it's a pretty clean squeeze. And way to tell if a squeeze is clean is to simply look back, look at the history of the name, look at how squeezes generally look in that name, and the tighter the squeeze is when I call it a clean squeeze. So this is pretty tight because if we look back, you can just look back to the last squeeze right here. It was a lot bigger than this tight squeeze. And if you have the Squeeze Pro, it's a lot easier because you have different color-coded squeeze dots to tell you how tight the squeeze is. But if you don't, you just look back, look at the squeezes, see how tight it is. And yeah, so I grabbed these 3,000 calls in the middle of the squeeze, and being positioned early, I did accept more risk. But my potential upside is really nice because when you enter in a squeeze early, the main advantage of doing so is that if the stock does break in your direction, you will have been in very early and can start taking off layers and taking off profit when most people and most day traders and retail traders are actually getting in. So you'll be selling it to them. You don't have to worry about liquidity problems. In the option you're trading, you just basically hand it to them because they'll be paying up for them because it looks like it's going to be ripping. And doing that, you can also leave runners too to catch an even bigger move. But like I said, you do have to accept more risk because in the middle of it, we don't know which direction it's going to break. Anyways, back to my position. I grabbed these 3,000 calls. I grabbed them at 3.4 per contract. And and I grabbed them because of this, of my zone 2. If you follow my system, we can look at this zone right here. We got a confirmation close above my zone, which indicates to me that there's a potential trade here. If I want to enter here, I can risk a close back under my zone. And that's basically what I did. So I enter here, risking a close back under my zone, hoping for a push higher, obviously, and we ended up getting that. And so we got it right near end of day, and I locked them at 5 from 3.4. And I did leave some small runners. I feel like I basically sold all my calls to a lot of retail traders who are trying to catch this move they're hoping is going to happen overnight. So I did hand those away, locked in most of them, but I am leaving runners. If Google does want to break the squeeze overnight, those should cash me in nicely. But of course, if they pull back, I'll be cutting those. Still will be green on this trade. The other way to trade squeezes, like I said, is while it's breaking a squeeze. So yesterday morning, today being Wednesday, it's at night, so you might watch this Thursday. But yesterday, as in Tuesday morning, I bought some Roku calls right at the open. And just to give you guys a little backstory of what was happening in the market that day, everything was gapping up in the morning, multiple percentages. Okay, so my plan was to basically find a name that was still in a squeeze and, according to my system, was holding above and giving me a bullish confirmation on my theory levels. And Roku was exactly that. So pre-market, right here, you can see we have this little dot right here. Now in comparison to all the other names of the market at the time, everything was ripping. Okay, we weren't getting any squeezes basically. Everything was ripping through them all. And so it was nice to see that we at least got some on this 4-hour chart, a little piece of a squeeze, and it was sitting right at the top of the squeeze right before open, so basically indicating to me that it was ready to blow. And like I said, keep in mind everything else had basically broken all their squeezes. So with Roku having this squeeze, I imagined a lot of market makers were keeping their eye on Roku for the open to catch up to the rest of the market and break this squeeze. So not just the squeeze, obviously. I did have another level below that it's a 30-minute level, and we got some closes pre-market above. And everything was setting up for a push right at the open to break that 4-hour squeeze. So if we go to the 1-minute chart, you can see exactly what I did. So basically I got in right at the open, risking a 30-minute close under my zone right here, and expecting basically a push higher right away. And if we look closely, I got in an open. I got in around here because right away it started pushing instantly. And I ended up locking I had 225 calls, and I ended up locking them in just seconds for around 70%. I don't even think I got to the second minute of the open, and I locked them for 70%. But now here's where you need to remember what time frame you're playing on. So I did lock this for a quick scalp, but I also left runners. And not only that, but I even added and locked another scalp later in the day and left runners on that one because it's a 4-hour squeeze. Not a 30-minute squeeze, not a 1-hour squeeze. This is a 4-hour squeeze, nearly a daily squeeze. And if these types of squeezes have a real breakout, it can last multiple days. So all in all, I ended up swinging some small size overnight, just playing with some profits. And you all know what happened this morning. Roku got news. Such a rare occasion. Not necessarily the point I'm trying to make, but yes, you can make major moves if a larger time frame squeeze actually fires. I did lock my runners for around 600% gain, but like I said, this was mostly luck as Roku just got news overnight. If we didn't get this news though, And Roku really did break the squeeze, just technically, not on any fundamental news. And say it got to 230, for example, even over the course of the next 2 days, today and tomorrow. By Thursday, say we get to 230, and it didn't have news, and it just broke technically. My 225 calls would have easily tripled still. So this is not the point I'm trying to make. Instead, just the breaking of the squeeze, the time frame being so large, in my opinion, you need to leave runners on plays like this, especially when the market's ripping and when names can catch up like Roku can. I'm going to leave you guys on this. I'm going to leave you guys on that, sorry. But I'll talk to you later, family. Hope you guys have a good night. Let's kill it tomorrow. I'll be here. I'll be trading. I'll be posting. See you guys later.